Yo, what's up, YouTube? It's Mr.BuyTheDip back here with another video. We are halfway through the probably more than halfway through the first month of 2025, and what a month! Okay, I mean this month, we've seen an absolute crazy bump up this month. I think that's more to do with Nvidia. So let's go to Nvidia and see that 152 push at the start of this month. So that literally affected my full portfolio so much, in so many positive ways. And even owning one share, you can see how much change that did in my portfolio. Now, AMD is still a hold. I'm going to hold and just flip this to probably 130 now. Okay, I have better investment opportunities, and I want you guys to watch this video very carefully and look at the stuff I have listed here. I'm going to incorporate some of President Trump's, policies and some of the stuff he's saying into your CASHAPP investing. Okay, so let's get straight into it. Stocks to keep on your watch list for 2025. Now, these links are some of the links I've used to do my research. This took about an hour and a half, 40 to 50 minutes, a lot of videos, a lot of understanding of key metrics like operating margin, operating income. You see stuff like PE ratio, you see stuff like cash flow, and you have to realize a company should not be spending more than they are earning. Okay, number one thing. Okay, if you got bills to pay and you're paying more bills, you got more bills to pay than you making. So if you making $2,000 bi-weekly and your bills are all the way up to $4,000, you're gonna be in debt. Okay, so I want you guys to realize these are some of the stocks I have. MU 90 or below, XLE energy sector. It's ETF. It's low risk ETF under Trump presidency. Instead of buying XOM, buy XLE. Now XOM is on CASHAPP. I want you guys to look at XOM. It's ExxonMobil, right? And this works with fossil fuels, so slightly in the oil industry, right? And this could be considered an energy / oil stock, and you can see it strike up because of President Trump. So let's look at September. The lowest was 111, right? November is somewhere around the time where we see President Trump's speech and stuff like that, and it goes up 23%. We see that high, but we see this big dip. This big dip could be caused by sell-offs. We see sell-offs right here all the time. So expect these big major dips after stocks go up all the way up. Let's say 125 and 121, right? You're gonna see that sell-off. So what levels should you be getting in at XOM if you want to get in? I will say under 110 is a good buy. So right now would be a decent buy, but really under 110 is where you want to get in at, right? And the stock also has a dividend yield, have a good operating margin, and their PE ratio is fairly low. Now, XLE. XLE, on the other hand, is a basket of stocks. An ETF is a basket of stocks. So not only do they hold XOM, they hold other oil / gas energy sector companies that are major. It's like the S&P 500, okay? If you're not understanding what an ETF is, you might be a little behind. You might want to watch some more beginner videos that I've uploaded on my channel, but at this point, we should know what ETF means, okay? And we should know what impact Trump is going to have. It's up 12% this month. Yearly, it's up 15%. Okay, so this month is a major month. Let's look at this dip all the way from December all the way up to January, and this is going to keep going up. I'm looking at 130 by the end of 2026. 130 share price, at least 120 to be fair. Okay, but let's go ahead and look at oil and gas exploration and production, refining the market, okay, energy equipment services, and renewable energy in some cases. So if you see, all of these things is what Trump and Elon Musk are for. So they're kind of tied in to stocks like these, and this ETF is going to benefit you so much. I mean, if you don't have the profit, if you don't have the capital and money to invest in XOM, invest in XLE. It's a basket of stocks. Just like I say, if you don't have enough money to invest in a company like Nvidia, Apple, Microsoft, okay, that's fine. We'll take $1,000, put it in an ETF like the S&P 500. Okay, now Oracle below 150 is a buy. CrowdStrike below 320 is a buy. Now CrowdStrike, PANW, and I have OKTA. These are highlighted because these are cybersecurity stocks. I want you guys to realize tech is an industry sector that is going to move up and up and up in the coming years. It's the only industry sector that grows so crazily. Let's look at Nvidia, up 75% in their operating margin, and This amazing, they grow so proficiently, guys. You need to realize that I study I study in the cybersecurity stuff. I know about security plus certification, and I've learned about firewalls. I've learned about cloud services, and I know why cybersecurity is important. Okay, now the net income. This is a key metric you guys need to realize. In the third fiscal quarter of 2025, CrowdStrike reported a net loss of 16 million. Now, what caused that net loss? Well, CrowdStrike had a power outage, which caused this stock to fall. If you look at this big fall, I mean, we're doing perfectly fine. If you invested in the start of the year, right, you're in for a ride. You're up here up 29%, and then you see this big downside, 25%. What causes downside? Well, they had a power outage that caused a lot of businesses, that caused a lot of organizations that were powered by or in linked with the CrowdStrike. They happened to be down for a while. Now that is called that is called your server being down, and in case of that, they have backup plans to allow some servers to run still. This is cybersecurity fundamentals. They usually plan stuff like this. So what does this mean for the market? A lot of people sold off. I don't blame them, okay? But if you were smart enough and you were more of a technical investor, you would have held your position from back here, and you would have bought more right here, because CrowdStrike is not going to fall off the map. I mean, think about it, okay? This is a cybersecurity stock. Cybersecurity industry is supposed to go 10 to 15% in the coming 5 to 6 years. I mean, think about that. You're not going to give up opportunity just because one bump in the road. This is a bump in the road, but look how they regain, and they're back 22%. So they're back where they're supposed to be. Okay, all you can do now is either invest at a small dip at 350, 345, or this dip. I don't think it's going to happen again, because organizations learn. They live and they learn from their mistakes. So whatever mistake they made that caused this power outage to happen, it most likely won't happen again. They better their firewalls, they better their network services, they have a better endpoint and access management service. Okay, they're making sure only this required person gets required management to a certain type of document or file. Okay, a lot of things goes into this, guys. Now, I want you guys to realize PANW, ticker symbol PANW. Let's look at the stock. This is another cybersecurity stock, up 4%. I don't see a major point flip side of that. I mean, up 4%, 6%, that's nice, but I want to see the stock back down to 170 lows. Okay, the fair value of the stock is somewhere between 150 to 155. That's what a lot of people have said. They did a split, so this was actually a $400 stock. They did a split to 200, and they're currently down. Now, will they go back up to 200? Sure, yeah, but is Nvidia going to go back up to 200? Yeah, but will we see 130 in Nvidia? Hell yeah, we'll see 128, 129. But what you need to do is make sure you're buying at those levels, because if you look at financial metrics, okay, this company is doing just as good as CrowdStrike. I want you guys to keep that in mind, okay? So PANW has a profit margin more than CrowdStrike. This means they can have more profit, and with that money, invest in their business to grow. Think about it. If Walmart and Target are head-to-head, but Walmart has a less profit margin, okay, but they managed to save up that money and invest in their business and grow more than Target, and Target has a more profit intake, right? But most of their profits are being used to pay off debt. Okay, they're paying off debt, they're paying off their employees, right? So Walmart has a better chance of growing their company because they have maybe slightly less money coming in, but they can reinvest in their company. Now PNW has a more profit margin than CrowdStrike. What they can do is pay off their debt, they can invest in their business, invest in better firewalls, provide better cloud services. All of this matters. You guys need to realize profit margin matters. You need to be able to pull in profit. Look at the profit margin on PANW. We go from, look at this little thing I have circled here, okay? We go from we go from negative 4.85, 6.38, 32, 32.99, and this is only going to grow. I feel like we're going to see a downtime of 20%, then we're going to go back up to 30, 35, 40, 40, 40, 40. We're going to maintain that, okay? And then there's going to be one drastic move, or upward or downward, okay? So just realize that, and you guys need to realize PNW is a buy, right? Buy at the right levels. Look at your portfolio, make informed decisions based on your portfolio. If you have money you're losing right now, do not invest in a company like PANW, right? Because this stock is not 182 is not a fair value for the stock. It's just buying power driving the stock up. Okay, gross profit margin as of October 31, 2024, PANW reported, Palo reported a gross profit margin of 74.09. That 74.09 is competitive. Okay, that's competitive with I can't say Nvidia because Nvidia is just so crazy, right? They did a split at 1,000, but PANW is so competitive compared to CrowdStrike, compared to a company like OKTA, okay, OKTA. So that gross profit margin, 74% is amazing. So that means that's how much money they can pull in, and just don't even regard their bills. Okay, let's say their bills are about 20% of the profit they pull in, 25%. So even that, they're working with 50% of profit after that 74% gets introduced. Okay, now operating margin in the fiscal year of 2023. Okay, so in 2023, Palo achieved an operating margin of 4.11. Okay, which was an improvement from 2022. 2022, they were in the negative. Okay, so it was a slight improvement. Now, these small improvements means a lot, because this operating margin means this company did slight adjustments. Now, let's look at their graph. Okay, let's look at from 2022 to 2023. Let's look at 2022. You see this big dip right here, 67.54. Right, you see this, they always start the year off on a good note, right, and then happen to have this big dip right here. So this big dip right here could be because of management changes, some cloud services not working, but you see it recovers perfectly, and we see that big move up towards 2024. Now, gross profit margin, so this doesn't account for other expenses like marketing, taxes, and whatnot. So therefore, even with the high gross profit margin, a company could still be unprofitable if its operating costs are too high. Keep that in mind. Okay, TTM is a 12 trailing month, basically the last 12 months on how the company is doing. Now, stock price forecast. 40 analysts with the 12-month price say Palo has an average target of 201.13. So you don't want to buy. This is similar to what Amazon was around when it was under $200. You don't want to buy at 188. You don't want to buy at 177. I think we're going to see a move to 195, 190, and then we're going to see a big dip down. People take profits, and we're going to see 168. Buy at 168, buy at 155, buy at 150, and then do another move to 230, 225. Okay, so a low estimate is 130. That's a big low estimate, which I don't think it's going to go that low. I mean, analysts are always right, wrong, but if it goes to 160, guess who's buying? I am. Now, make your decisions wisely. Okay, look at your portfolio. If I look at my portfolio, I'm just waiting on GameStop, right? And I'm going to take those profits and go into Palo at 164, and 164 is very achievable. I mean, look at this. They just went on this big run-up. So when a company just goes on a big run-up like this, they're going to get dropped down for sure. Because you see these big gaps in between. We go from 169 all the way up to 174, right? It's too big of a gap. So that gap is going to get filled. It's going to come down. And then we see this big squeeze up from 177 all the way up to 184. Guys, this type of upward trend, you do not want to get caught in that. Okay, you're going to be stuck there forever. Okay, so this trend, this basically means a lot of buyers came in, right? And right now they're probably seeing profits. These could be new buyers, these could be old buyers, right? But these could be swing traders. I want you guys to realize these can be swing traders who are only holding this position for a couple weeks, a couple days, a few hours. It could be anything. So do not get caught up in this. If you want to be a midterm to long-term investor, 2 to 3 years, catch Palo at 168 and show your discipline while managing your portfolio, okay? Now, let's move to OKTA. Operating margin is consistently negative or deteriorating. This means the company is struggling to control operating costs. Now, I talk about a good company like Palo. Let's talk about OKTA, okay? Now, OKTA is not one of those companies you want to just invest in right away, but you want to follow it, okay? You want to have some information on it. You can swing trade it a little bit if you want to be that type of investor. I mean, there's nothing wrong with swing trading, right? There's no fun in just buying and holding like a quote unquote retail investor, right? So Apollo is up 2% on the year. The highest they were up was 27 at 110, but they're currently all the way down to $88. Is this a buy? Well, let's look at some of their key metrics. Oh, they don't have dividend yield. They don't have their operating margin. They don't have their PE ratio. Now, let's look at some of their stuff. It's all red. I highlight this in red to show you guys this is not the company to invest in right now. Operating margin is negative. That means they're spending more on operations than its earnings from sales. So let's say OKTA, they sell a cloud service for cybersecurity to a company like, I don't know, to a new company for groceries like Walmart, okay? Boom. Now, that means with that product that they sold to Walmart, they have not earned enough profit to cover for their debt. Okay, so just keep that in mind. So they're not in a good state right now. Okay, you want to look at everything, but don't disregard the stock. If a stock is doing bad, don't just be like, it's doing bad, get it out of here. Keep it on your radar. Okay, look at its daily charts and net income growth. Okay, look at the daily charts. How's it doing daily? Is it up? Is it down? How many fair value gaps are there? Okay, can you come down and buy at a fair value gap when it's down and flip it for a 5%, 6% gain? Do those things. Okay, have fun with the stock. But if you want to be a 1 year to 2 year investor in a certain company, you need to make sure it's stable and it's growing. Okay, operating income accounts for revenues minus operating expenses like salaries, rent, so basically bills. Okay, if this number is negative, the company is spending more in operation than it's earning from sales. So if you look at operating income for OKTA, you will see that it's negative. Now, this chart is not for OKTA. That is NVIDIA's net income growth in 2022. If you see a net income growth over 60% in a company, then place your investment, okay? So the net income growth was over 60% back in 2022. It was 125. Right after that, you see a down year. This is very much expected. A lot of people probably sold right here. Oh my God, we're down 55%. I think the company's done. It was just up 125% last year. No, that is not what you do, okay? You want to work with the company, still look at their key metrics. Okay, how much are they getting on, how much are they spending on taxes? If you see NVIDIA, it did great in 2022, but right after that they were down 55% in net income growth, and their income tax expense was in the negatives as well. Now, you keep moving forward and you see they're up 233%, and the people who sold at the negative 55%, they're probably regretting their life decisions. They're probably like, oh my God, we shouldn't have sold. We had a move that was worth over 600%. So keep that in mind. What to look for? So a slow growth and good changes. So revenue growth is basically is the company consistently increasing its sales. Okay, these are key metrics you need to look for. Net income, is the company profitable, and the profit margin, is it growing over time? This is technical analysis. Okay, don't just buy a stock because it's low. Why do you want to buy it because it's low? A company could be in debt, and that's why they're in low. But if a company like Nvidia is down, I mean, we can buy that, right? They're not in debt. They have good price to earnings. They have good PE ratio. They have a good operating margin. So keep those in mind. Earnings per share measures profits allocated to each outstanding share of common stock. So a rising EPS is a positive sign. Operating margin, this shows how efficiently the company operates by comparing operating income to revenue. So operating margin is another good factor. Okay, so the higher this is, I feel like the better it is. So if operating margin is 72, 75, 80, that means the company is working with a lot of money. So keep that in mind. Anyways, so I want you guys to realize I have 3 cybersecurity stocks here that I want you to keep on your radar: CrowdStock, Palo, and OKTA. So why? Well, the cyber industry is expected to grow significantly in the coming years. So this estimates about 10 to 20% annual growth. Don't look at 2025 alone, okay? You can do that with certain companies like Nvidia or Tesla or something like that. But if you're big bullish on the tech, right? Look at companies that are literally changing for other people. Palo is willing to change for other people. That's what I like so much about Palo. They offered free trials. So they are willing to work with people. If you could be a people's person in the business industry, right? You can do anything. I mean, you can grow your company to literally, and the sky's the limit, okay? So If you're willing to change, and Palo is willing to change, they're willing to, say, okay, we'll offer you a free 2-year trial, free 1-year trial till your service is expired from a different company. So keep the stock on your radar. You want to catch this level at 166 and get it all the way up to 230, 220, and get some profit right there. Okay. Make sure you have these levels in your head. Make sure you're either taking profit or you're looking for opportunity to buy in. Okay, do not get stuck in a move all the way up here when you see this big gap up. Okay, you don't see stocks that keep going up and up and up and up and up. Okay, this is not 2021, and we're not talking about GameStop in 2021. We're talking about Palo in 2024. The stock did a split at 400. They're gonna go lower. Trust me. Okay, there's gonna be times where you see Palo at 160, 165, 166, but those are the key points where you need to buy. Okay, now, if you missed opportunities on AI stocks like AMD to 200, NVIDIA to 2023 to 2024, you don't want to miss this one. You do not want to miss cybersecurity. I mean, cybersecurity has been around for, you could say a while now, but it's still growing. Okay, and the more cybersecurity is growing, the more businesses and companies realize that they need this. Okay, every business somewhat has credit card information. Let's say if it's a gym, if it's a grocery store, okay, you're working with people paying you. Okay, that's how businesses make money. If you're on an online, if you want to make an online clothing store brand, whatever you just dropped your clothing brand, right? You need cybersecurity operations like Microsoft, or you got Palo or something to protect your website, so people can trust their credit card credentials. So if you have something like Palo saying, okay, well, we can give you a 1-year, 2-year free trial while you're with a different company, and when their stuff expires, then you can switch to ours, or you can at least try our service first. That is a big move up, because you have a lot of new business owners that want to expand their business and do it the right way. So Palo is offering that. Okay. The global cybersecurity market was valued at over $200 billion in 2022, okay? And the estimates predict that it will exceed to $400 billion, so it's going to grow another $200 billion by 2030. That's what I'm saying. Palo, CrowdStrike, right? You see NVIDIA. Let's get NVIDIA to 2028, 2026, right? Let's see how it can do during these years. You might see some down years, but AI is not done yet. Is AI done? No. People are going back to college to learn about AI. They're getting their bachelor's, associates in AI, specifically AI, because look at how much money people working for a tech industry like NVIDIA can make. Okay, so a compounded annual growth is 10 to 15%. This suggests ongoing and sustained growth. So cybersecurity industries itself is gonna grow. So if an industry itself is gonna grow, what should you be doing? Well, you should be buying stocks that are gonna help the industry grow. If AI is expected to grow 10 to 15% in the next year, what should you be doing? Buying an AI stock like AMD or NVIDIA. Now, AMD you could flip AMD to 130, 135, cut your deal, get out of AMD, okay? NVIDIA could be a longer hold. NVIDIA is obviously the better competitor. So keep these things in mind. I wanted to share this stock with you guys. I wanted to share XLE, how energy stocks could be affected by President Trump's, President Trump being in office, but also I want you guys to realize, don't disregard cybersecurity. Don't just because AI is in role, okay, don't disregard a stock like this, or don't disregard a stock like CrowdStrike, which is also a good buy, but I personally like Palo. I'm more bullish on Palo than cybersecurity for some reason. Call me crazy, I don't know. That's my analysis, and thank you guys for watching. Like and subscribe. If you have any questions, comments, concerns, please let me know. If you like the technical / analysis type of videos, please comment down below. I could do more of these. Thank you.